This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Tuesday, July 1st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at September corn down 6 3/4 at 402.5. August soybeans were down 10 1/4 at 1019.5. And September Chicago wheat was down 4 3/4, or excuse me, up 4 3/4 at 543. Yesterday afternoon, we got weekly crop conditions. Corn came back much better than expected, 73% good to excellent. That's up 3% from a week ago, and well above the average of 64%. Soybeans stayed steady at 66% in the good to excellent category, and that's slightly ahead of the average of 62% there. Spring wheat down 1 percentage point in the good to excellent category at 53%, and just behind the 5-year average of 54%. And for winter wheat, also down 1% in the good to excellent category, 48% good to excellent, slightly ahead of the 5-year average of 44% there. So good morning, guys. We got June report behind us. Weather continues to, I guess, be confusing at best. It gets wetter, hot and dry, and just goes back and forth. So it's still a kind of a conundrum there. But I think at the end of the day, market's still telling us that it's pleased with the outlook here as we go forward. So I guess with that, Dustin, maybe kick us off with a few thoughts here this morning, and we'll throw around the room.
Yeah, thanks, Dan. I think, there's been a lot of hesitation for selling, obviously, with negative margins. So when we get into this point in the year and we're getting favorable weather, and then we just had a huge crop ratings increase last night, 3%. Iowa is looking fantastic. Is what that shows. And then this morning in the ECMWF forecast, they added a bunch of, I wouldn't say a bunch, but it cooled off quite a bit. And then they added another 15% moisture, let's say, for the next 2 weeks. So I think those two things comboed with a post June 30th report, and you're talking about the first 2 weeks of July, good weather. I think that's where we're probably accelerating a little bit in the overnight session. It's interesting because you do have some things that are somewhat friendly, like the dollar's hitting new 2-year lows right now. So currencies are generally supportive, but I don't think anyone can really help backyard-itis when it's in everyone's backyard right at the moment.
Yeah, that's a good point. Ben, what's on your mind this morning?
I agree with Dustin about backyard-itis. On my end, it's definitely not been perfect, particularly in Ohio and a large part of Indiana. I think they'll have decent crops, but they are not going to be anywhere near records. Thought yesterday after the report that a lot of the narrative that we had traded for the last 6-7 weeks, which was there must be more corn, they're going to have to raise stocks, and we must have planted 97.5 million acres of corn, both were debunked. But as long as the weather stays good for corn production, I guess we're going to have to look to find a base at some point, and it wasn't first notice day. So, and I think that we're probably looking for something concrete on some trade deals, because we are invariably going to have to compete with corn exports out of South America more so than we did last year.
Well, it's interesting you mentioned trade deals. Bassett was out this morning, Treasury Secretary, and said that they're going to get this big, beautiful bill done and then talk about trade deals, but not before that. So I know we've talked yesterday about China. Last Friday, the narrative from both sides was that they had a deal, but nothing agriculturally related came out of it. So I don't know what they're holding back. President Trump's supposed to be going to Iowa to give a speech. I can't imagine he's going to go there with this market set up and not have something good, or at least some positive news, hopefully. They are President or Vice President Vance this morning is on Capitol Hill. He's up on the hill trying to get this thing to the finish line. So hopefully they're saying by this afternoon they may have a vote, which will be interesting. Justin, 45Z stuff, oil's just slightly higher, one of the only green things on the board. But outside of that, I guess what's your kind of post-digestive take on the market?
Yeah, I think the last several weeks, just hasn't been a lot of interest in our markets. Funds have obviously built a sizable position. Last commitment of traders, it wasn't really the managed money that was piling on. It was liquidation on the commercial side. So I'm guessing going into first notice day, longs and shorts getting out, squaring up positions with the physical market. So that was the biggest liquidation and open interest there. So that would mean, kind of makes sense with what spreads did and some stuff having to square up as we went into first notice day. Unfortunately, it's one of the most boring reports I can remember for this report, maybe since I've been trading it. So there's nothing in there, to Ben's point, we did debunk, some of those fears of more acres or a lot bigger stocks, but at the same token, literally nothing new to change course or get any excitement in these markets. To Dustin's point, where a lot of guys are kind of below cost of production or have big crop insurance policies or, some other, instrument that they're leaning on for marketing. So as far as, getting a lot of physical sales in place, hasn't been a lot of interest. Now, as you go to Dustin's point, if you're in those areas that are, you're thinking you could be 10% above, your APH or something like that, right? That's where you'll start getting incremental selling and additional sales that need to cover you above and beyond some of those other tools that we talked about. So as you get further down the line towards pollination and the confidence grows and on how the crop looks, you'll continue to pick up selling. But as far as like a big slew of farmers selling, I don't really see it at these levels and at this date. So I think there's just not enough interest for someone to come in here and say, like, we're going to fight the trend. I mean, the trend is we're making lows, we're contract lows. So there's no way you can look at it and say we're not in a bear market, so what would it take to kind of find some good support areas? If we were selling a bunch of corn here or to Dan's point, some trade deals get announced, but all that stuff, I mean, there's a lot of money or a lot of people on the sidelines because it's just not very interesting right here. So, and if you've tried, obviously, if anyone's tried bottom picking or buying it, you've probably been worn out by now. It's been just kind of a brutal trade, low volatility. So I think people are probably looking to go do something else instead of trade these markets right now. So
yeah, I mean, we, you don't want to joke about it, but I mean, it's like it is a holding pattern. I mean, at this point, you don't know enough about your yield. I mean, you can say that whether you're off to a good start or a bad start, you can run those numbers and see what that looks like. But like to sit here today and say, well, I'm going to be 10% above my APH would be probably a pretty aggressive comment,
Yeah. That's the hard part, right? When you're, when you have to say, okay, I know I'm going to get this monster yield, then yeah, you can, certainly sell stuff here. And I talked about yesterday in the show, I still think with the big carries in the market, and if you have lots of storage and you have big crop insurance policies, for example, there's probably some things to do, selling out forward and trading around that crop insurance position, which I know we've had lots of clients that have been doing some stuff like that. So there's some things like that to manage. As far as just saying I'm going to sell, 270 bushel an acre at 430, because I think that's just going to be a tough thing to do for guys until you get like you said, past pollination and the market's good at wearing you down, this early in the year. You really have to get through July, August, mid-September. Really got to fill in the crop to get those really high end yields. And so you would say like, okay, this is a really good start, right? We're getting some of these rains, things are looking good. It's this time of year, right? The it's warm and the corn crop, feels like it grows a foot a day. So anyone that's driving around is be like, oh man, this looks great. Right. And I think that's what the market's saying right now. It's just, what does that mean for you? And how do you manage any kind of risk that you think you might have around that? So,
yeah. Very good. Ryland, welcome back. Obviously a lot going on the livestock side. It was interesting to see. It looks like we're got a gradual reopening on the border there over in Douglas, Arizona. So that should be interesting. Interested to hear your thoughts on that. And then I guess give us your take on from last week's Hogs and Pigs report. Get us up to speed on livestock.
Yeah, absolutely. Well, I mean, being gone for a week and just seeing kind of everything fall apart day by day was kind of disheartening. But at least cattle started kind of bounce back here a little bit with market at least coming back above the 40-day moving average. Yeah, there was an announcement by the USDA that there's going to be kind of this phased reopening of the Mexican border. So as you said, starting July 7th, they're going to open the Douglas, Arizona port of entry. So obviously, the safeguards are going to stay in place, and that's, I think, to see if this protocol is going to work. And it sounds like over the next several weeks, the other ports will open as well, New Mexico, Texas, in the coming weeks. So I think overall, the market's going to see this as probably something relatively negative on the feeder side longer term, but the phase reopening is probably going to slow that down just a little bit. I mean, obviously, the market's been on a little bit of a tear these past couple days with some short covering. But overall, it just feels like this market really wants to try to stay up right now. The buyers are just down there kind of waiting for lower prices. So obviously the trade is staying very long right now. I think the sentiment still is this week that we're going to see a light kill, especially because of the holiday. And it should support beef prices. Obviously, there was a strike at a Texas plant in Amarillo, Texas. And it's not a small plant. This is one of the biggest plants for Tyson at 5,500 head, per day. So, I mean, I think that's possibly taking a buyer out of the market as well. I mean, the market's been aware of this for several days. Obviously, that's a short-term problem that I think that Tyson's going to have to deal with, but I imagine they try to resolve that pretty quickly, meeting some of those workers' demands. So still staying on top of that, but you've thrown a lot of news at this market. Could be a little bit of concern, I think, overall that beef prices stayed higher for longer right now, just seasonally. But like I said, it feels like we're trying to hold that 40-day moving average support. We've already kind of factored in a big break in cash. And I think the sentiment is still on the weaker side this week. So we'll see how it kind of shapes up here, if we can hold or if we're just going to start to slip again now that I'm back. So on the hog side of things, yeah, hog and pig report may have changed a little bit of the psychology. The really big standout obviously was going to be pigs per litter. I think the report kind of came closely in line to what everybody was really expecting. And, since then, it just seems like the trade was record long going into this report. So it was kind of prove me time that we were going to see breeding herd down, that we weren't going to see the pigs per litter. And now, I think we're starting to see some liquidation here. It just seems like the psychology may be shifting a little bit. We're getting into a seasonal time frame where typically we do start to see lower prices. So I think there's a lot, at least a more elevated downside risk based on possibly better than expected supplies, I think, ahead based on that report. So overall, we're coming back, knocking on the door of the 40-day moving average, and the funds are very heavily long. So I could imagine there's going to be some decent liquidation below those levels if it does happen. But overall, cash was up 379 yesterday, and carcass was a little bit lower. So I'm not sure which one's going to take precedent, but it does feel like the market's turning over a little bit.
Rather, forgive my ignorance, but with this, the continuation of wheat corn prices and things like that, is that going to ramp up some of these expansion plans that we've been talking about? What's your thoughts there?
I think so. I mean, cheaper feed is one piece to that puzzle, and obviously profitability is numero uno. But I mean, like, we've been seeing producer profits really strong, especially in the back end of the market for hogs and in cattle. So I think it really does lend itself to expansion. I mean, we just had JBS come out and say that they started to see signs that there was going to be some herd expansion, that they were starting to see those little indications, which is obviously a big risk to price and kind of the longer term trajectory of the market. But we'll get more information, at least on the cattle side of things after the inventory report in July. But at least on the hog side, I mean, like with the breeding herd numbers being as low as they are and the uptick in pigs per litter, I mean, you would think that incentive is there, but right now we're just not seeing it.
Yeah, you would think too, Ryland, with that, like, meal, like we talked about, making 9-year lows. And if you do get some of these kind of 45Z longer guidance biofuel things, now you're talking 20, pick whatever it is, 2029, 2031. And and it has to be, basically Canadian, US or Mexican feedstocks. Like you would think that would give a lot of confidence that we're going to have a lot of crush, a lot of cheap meal, so like when you
Yes.
have a long time frame too, then you're like, okay, this is just a 1-year phenomenon. Like we might have cheap feed prices for the meal. So I would think
Right.
hogs and chickens would
expand like crazy in that kind of environment. There's been really all these little pieces to the puzzle, really trying to get the producer to expand, I think, just over the past several months for sure. You've got cheaper feed, you've got really good weather, you've got high profit margins, especially just going out further and further, especially in the hog market. So I don't know why you wouldn't. You know what I mean? Like, obviously there's risk, like I'm not saying that it's a willy-nilly decision, but at least the market's trying to incentivize that, I think. And the lower that feed prices go, it just makes that decision, I think, a lot easier to make, to take more of that on. I mean, I feel like you have to have a plan if you're going to do that kind of thing.
Mm-hmm.
You have to be conscious of your forward margin and look to protect those. But the incentive is definitely there. I think it's been there. So I wouldn't be surprised if we see the cattle herd start to expand, or at least start showing signs of that. Not exactly ramping up. I mean, there's always going to be caution, just because 2014, 2015 is still fresh in everybody's mind at the crash at the turn of the last cattle cycle. But with hogs, I mean, we're at massively high prices, and in my opinion, there really isn't much of a story. You've heard a lot of chatter of disease issues, but it looks kind of like a normal market to me, so I mean, like, I don't see a lot of change. I think a lot of what's holding up the hog market could be the cattle market, but we'll see, I guess.
Yeah.
So I do agree. I think the expansion incentive is there from a profitability standpoint.
Very good. Appreciate the update there, Rye. Just came into the open here. We got September corn now down 7.5, 7.25 there. 401 3/4 is the last. August beans are down 12 at 10.17 3/4, and September Chicago wheat up 5.5 at 5.43 3/4. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at AgYield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.